Hello, and Happy New Year from your friends at the Financial Advisory Group. Well, we made it into 2024. From a markets perspective, that was a heck of a way to end 2023. Those last 2 months were something we didn't want to end. It was actually pretty historic how strong the market ended 2023. And just on a quick note there, from a sort of short-term view of things, what do you think typically happens when you have two really good back-to-back months for the market? Usually the market takes a little bit of a breather, and that's okay. So real quick thought, just short term, the analogy we make of whether you're fishing, whether you're golfing. As a golfer, I like to use the analogy of if I birdie 4 straight holes, which I wish I would, what am I probably going to do on that fifth hole? I'm probably making bogey or worse, right? It makes sense that when the market goes on a short-term hot streak, that it actually takes a little breather. In fact, we like it if it takes a little breather. So our view, right, when you get 2 months like that, let's reset expectations and understand that we're probably due a little bit of some sideways or sort of back and forth action in the market, and that's okay, right? That leads into sort of you head into a new year. What are the resolutions? Resolution number one, and it continues to be something we talk about. Let's focus on controlling what we can control in 2024. We're getting better at it, but I think what we need to do is understand that the market is the market, right? And we'll talk a little bit about how interesting last year was. Not many people were thinking the market was going to do what it did last year, but look what it did, right? So let's control. We can't control the market. What can we control? The financial decisions we make every day, right? So let's focus more on the financial decisions we make and let the market do what it does. Because over time, the market tends to help us, right? And the second resolution we'd ask for all of us to have this year is continue to place your trust and confidence in us. We say it again and again, but that trust means the world to us. And what we'd say is let us worry about this stuff, right? In 2024, let us worry about this stuff for you, and you focus on enjoying life, spending time with family, friends, hopefully like most of you were able to do over the holidays. So quick thoughts on sort of our resolutions, if you would, and to get into some of our thoughts on some of the pressing or more timely topics today. You'll see an interesting image on screen right now, right? Image of someone bungee jumping off of some really high point over a really, what I'd call, it looks like a narrow and shallow creek or river. I'm not signing up to do that, right? So what do bungee jumping and Bitcoin ETFs have in common, and why are we talking about Bitcoin again? Well, cryptocurrency or Bitcoin sort of went out of the news for a little bit, but just recently, the SEC, who approves different investments, actually approved the ability to invest in a little bit easier way into things like Bitcoin through what's called an ETF, an exchange traded fund, right? What this basically means, without getting into the weeds, is it's easier to now get access to things like cryptocurrency. So the question becomes, should we? Well, this is where we compare bungee jumping and cryptocurrency or Bitcoin. Just because you can do something doesn't mean you should, right? I bring up the idea of bungee jumping, right? I tend to consider myself pretty adventurous. There's no way in the world I would do what this woman's doing on the screen, right? Same thing with Bitcoin. Bitcoin's appropriate for some people, but there's a lot of people it's not appropriate for. So we're still learning a lot about cryptocurrency and sort of following it. But our view right now is just like bungee jumping isn't for everyone, cryptocurrency isn't for everyone either. And if any of you are willing to go bungee jumping, send us pictures. We'd love to see them. On to sort of a recap of 2023 and some of our thoughts into 2024. We already said it. If you look at the chart below here, 2023 was a heck of a year. And man, that fourth quarter, if you look at it, was pretty good. In fact, it was somewhat historic. So why is the question on the left-hand side of the screen saying, what do parents heading out of town and the Fed have in common? I'm going to try a little analogy with you here, right? The Federal Reserve, as you know, raised rates a lot over the last, let's call it 12 to 18 months. And now they're on the precipice, or at least looks like they may stop raising rates or start cutting them sometime soon. I'm going to make a comparison to what if I'm back to Damien at 17 or 18 years old. In full disclosure, of course, I would have never done this. My parents come home and they say, hey, Damien, we're heading out of town for the weekend. What's one of the first things that pops into my mind? House party time, right? I can call my friends and have them come over. So I get excited. It's like the Fed, every time it looks like the market is interpreting that the Fed is done raising rates or is going to cut rates soon, the market gets happy. It's like my parents coming to tell me, hey, we're going away. I get excited, right? So my parents get in the car, they go driving out. And if you look at the market, look at that middle part of the year where how strong the market was. The market was interpreting that the Fed was done raising rates, the economy was cooling down, and my parents were on their way to the airport, party on. Well, then what happened in this September and October? Well, my parents were on the way to the airport. They called me up and they said, "Oh, Damien, we forgot. We actually forgot our luggage. We have to head back to the house and pick it up." Now I'm in trouble, right? I'm nervous. But I already called my friends. They're on their way over, and my parents are on their way back home. The market gets nervous every time it seems like the Fed says, "Oh, wait a second, we might not drop rates soon because the economic news is too good." In September and October, the economic news actually got better. The economy accelerated, which means the Fed may not be done raising rates, and they may actually raise them again. So the market doesn't like it. My parents call me, "We're coming home. I'm nervous. I'm scared." Well, then what in the heck happened in November and December? The news started changing. The news showed that the economy wasn't necessarily overheating. It was sort of coming down to a really nice sort of level, if you would. That was like my parents calling me back and saying, "Hey, Damon, never mind. We actually do have our luggage. We're not coming home." I get excited. The market rallies because the market then interprets that as, "Hey, now the Fed may cut rates soon." So we like this analogy of every time the market feels like the Federal Reserve is closer to raising rates, it's like my parents saying we're on the way to the airport. Every time that the market gets the impression that the Federal Reserve may not be done raising rates, it's like my parents calling me up and saying we're on the way home. I can't relax being the one at home until my parents get on that plane. The market can't relax until the Fed says we are done raising rates, we're going to cut, or they actually cut. That's our analogy of the day, right? The market's waiting to hear from the Fed, we're done raising rates. And every time you get an economic report that's a little bit hot, right, that things are a little bit better than we expected, the market may get a little bit nervous. So as you saw at the end of 2023, the party was on. My parents were on the way to the airport. The Fed was going to cut rates soon. Already in 2024, that narrative's changed a little bit. Inflation came out a little bit higher than we thought. And it was like my parents saying, "Never mind, we're on the way back." So until they get on the plane, the market won't be able to relax. Big picture underneath the hood, same thing we said all last year. Job market looks steady. Companies are in good shape. So let's not get too focused on that. But we think the market will just continue to be sort of choppy until my parents get on that plane. And again, full disclosure, it's not like I would have ever done this when I was younger. On to what's our forecast for 2024. Well, if you saw our video at the end of 2023, you probably know where we're headed with this. Our forecast, if you're ready for it, is very telling. We don't know. We've learned more and more as you study this, that, and I like the line at the top of the chart or the screen, the more adamant forecasters are, the more likely they are to be wrong, right? Forecasting the economy or the market is just hard. And we'll admit that. We've used the line over and over again from Charlie Munger or Warren Buffett. It's been credited to both, that in investing, the best thing is to know what you don't know. And what we don't know is where the market's going to close in 24 hours, let alone to tell you where it's going to close in 12 months. The biggest, if you look at the chart below here on the screen, look at all the narratives in the past couple of years. In 2020, get out of the market. The worst is yet to come. COVID's here. Who would want to invest during COVID? The market's up 18%. 2021, if you remember, NFTs, non-fungible tokens, those were a big thing we talked about for a while. Do you know that almost every NFT is now literally worthless? In 2022, economists predict interest rates will rise by about 0.5%. Well, they were a little off. They rose by 4%. That's 8 times what they were forecasting. 2023, which we just came through, the consensus was recession's definitely coming and the market's going to struggle. Well, both were wrong, right? The economy actually expanded and grew faster, and the market was up a scant 23%, 24%. So it's hard, right? Our belief is that, again, let's go back to controlling what we can control. We can't control the market. What we can tell you is things look okay. The job market looks steady. People are spending money, because if you're working and you're making money, you typically spend money. And companies like Microsoft continue to be in excellent shape. So instead of trying to forecast where this goes, let's just understand that let's not focus on that part and understand that let's just focus on the planning side, making good decisions, and not get too caught up in where we think the market's going to end the year. In 2024, I like this, again, the line here, who cares what they say? Let's just buy and hold. And it's not necessarily that simple, but it can be. So our thoughts again, sort of to take this back and rehash a short summary of the call or the video. Happy New Year. We're happy 2024 is here. The end of the year was excellent. Again, because to take the analogy further is my parents were on the way to the airport. I was happy, but they're not on that plane yet. And until they get on that plane, it's probably going to be hard for this market to really get itself going without some fits and starts every now and then. Let's hope the job market remains steady, which it looks like it is, and really focus on controlling what we can. Let's make this year about focusing on what we can control and not focusing on what we can't. So there's our thoughts for the beginning of 2024. As always, we thank you for the trust and confidence you place in us. We look forward to another great year with you. Questions, concerns, you know where to find us here. Thank you as always, and let's make it a great year.